Hello students, good evening. So today again we are another session with the redemption of debentures, and this is one of the finest chapter we have. Little difficult you can say, but not difficult. Actually we have so many tricks to understand in a better way. So this is the last chapter of your company accounts. So let's begin our session without wasting the time. So let's start. So again, for agenda for today's session is we need to understand about redemption, what is redemption overall, methods of redemption of debentures, journal entries, creation of DRR and DRI, and again the learning tips to learn the journal entries, right. So let's start with this. First of all, we need to understand what is redemption. So redemption is basically combination of two words which means re plus deem. Re means again and D means payment karna. So whenever the company takes loan, so the company has to repay that loan also. So redemption is the repayment of loan. Whenever the company takes the loan through the issuing the debentures in the market, the company has to repay it also. So redemption means re plus deem. Re means again and D means payment. Alright. So there are four methods for which the debentures can be redeemed. First one is the lump sum method. Next one is the payment in installment. So this method is called draw of lots. We can also, another name is called draw of lots method. Okay. Next one is purchase in the open market, and fourth one is a buy conversion into shares or debentures. So basically the third and fourth is not in our syllabus. So today we are just talking about the lump sum method and the draw of lots method. So meaning of terms. In order to start the chapter, so we need to understand the terms. Now what do you mean by the term terms? Just think about it. What do you understand the means of terms? Terms stand for T for time, A for amount, M for mode, and S for source. Very simple thing. So whenever we take the loan from the through the debenture, issuing the debentures in the market, so definitely that loan is meant for say 3-4 years, maybe 5 to 6 years. So we need to decide the time before taking the loan. So yes, time is, that is the reason, these are the factors of taking the loan. So time is like we have taken a loan for 4-5 years. So this is time. So this is one of the factors while taking the loan. Second one is the amount. How much amount is required? Because whenever we take the loan, so it depends upon two parameters. It depends upon the repaying capacity of our company, first one, and second one, because whenever we take the larger amount of loan, so we are liable to pay larger amount of interest also. So it depends upon the requirement of the loan. So yes, amount we need to decide. Next one is the mode. So whenever we take the loan, so how can we repay them? Is the repayment is done through the cash? Is the repayment is done through the check or maybe the bank draft? And third one is it can be converted into the shares or maybe into the debentures. Next one is the source. Now what can be source? I mean, we have taken a loan. So how can we pay the loan? Because we have to pay the loan. So there are two ways. First one is the retained earning and second one is the out of the profit. Or we can say fresh issue of shares. So there are three things. First in retained earning, whatever income we are generating, so that income is being, profit is accumulated at one place and that profit can be utilized for the repayment of your debenture. So this is the retained earnings. Out of the profit, suppose sometime we have a huge profit, so that profit can be used for the repayment of debentures. Next one is, suppose the additional number of shares can be issued in the market so that we can get the fund and that fund can be used for redemption of debentures. Let's go for the next slide. First one is the lump sum method. This is the first method we have. So when full and final payment made at one time. Lump sum method means when full and final payment made at one time. So let's understand this. Whenever the debenture is being due, so the entry should be X% debentures account debit to debenture holder and debenture holder account debit to bank account. Now let's get into some logic. See, whenever we take the loan, so what is the entry for the same? The entry is bank account debit to X% debenture account. Are you agree with this point? Suppose if not, so in the chapter issue of debenture, we have taken the example that whenever the debenture are being issued, so actually there are two entries, bank account debit to debenture application and allotment account. First, and second one is debenture application and allotment account debit to X% debenture account. If you could combine both the entries, so you find the entry should be bank account debit to X% debentures. So let's take an example. Let's look at my two fingers. See, bank account debit to X% debenture. Whenever we take the loan, so the journal entry should be bank account debit to X% debenture. Here X% debenture is basically the rate of debenture what you are taking. So bank account debit to X% debenture. Whenever you repay the loan, so the entry should be X% debentures account debit to bank account. So you can check the entries anytime. आप कभी भी इस entry को check कर सकते हो. Just take an example. While repaying, what did I say? X% debentures to bank account. See, X% debentures account debit to debenture holder account for the due wala purpose. And again, while making the payment, the entry should be debenture holders to bank. So if you could combine this, so see, debenture holder got cancelled, so the net entry should be X% debentures account debit to bank account. So this is just opposite of the loan taken. While taking the loan through the debentures, the entry should be bank account debit to X% debenture account. While repayment of the loan, the entry should be X% debentures account debit to bank account. So this is the net entry you have. This is the net entry. But we are not using the net entry. First of all, you have to pass the entry for the due and then you can make the payment entry. I hope you understand. Now, if the debentures are redeemed at premium, so see, whenever the shares or maybe the debentures are issued at a premium, so issuing the debentures or shares at a higher price, it receives, you receives the extra amount of money, and that extra amount of money is considered as a capital income for the organization, and that's the logic why it's being credited. All right. Now, while making the repayment, while making the payment towards the redemption of debentures, towards the debentures, so suppose if you need to pay some additional amount of payment on account of your premium, so that payment becomes a capital loss for the organization, and that's the logic why premium on redemption or debentures account is being debited. What does it mean? It's really simple. Suppose we have taken a loan of say $100, right? And at the time of repayment, we need to pay back 105. So see, 5 rupees we are making the payment, additional payment. So that additional payment may be a capital loss for the organization. So the entry should be X% debentures account debit, premium on redemption or debentures account debit to debenture holder. And at the time of repayment, the entry should be debenture holder account debit to bank account. Okay. Now, this is very important, creation of DRR. So, what do you mean by the term DRR? As per the section 71, subsection 4 of the Companies Act 2014, this is the latest one. So, you required to create 10%, 10% of the value of the outstanding debenture less the amount available to DRR is being transferred to DRR. Now, what all companies are exempted to create DRR? All India financial institution regulated by RBI, number 1, it is being exempted to create DRR as well as a DRI also. So, banking companies are also exempted, other listed company, housing financing company. So, basically only the unlisted companies have to create DRR at the rate of 10% per annum, at the rate of 10% for the outstanding balance of the debentures less the available amount of debentures. Okay, so basically this is the thing, and next one is in the brief I have explained that debenture redemption reserve, as I mentioned, the section was 71 subsection 4 with the rule section 18 subsection 7 of the Companies Act, share capital and debentures rule number, and it is being passed in the year 2014. So on this note, DRI should be created at the rate of 10% per annum, and DRI is a kind of investment. The meaning of DRI is debenture redemption investment. DRR stands for debenture redemption reserve. So it is being created at the rate of 15%. DRR can be created on the 30th day of April before the date of maturity. DRR can be prepared, can be created at the rate of 10% per annum before the date of maturity, and this is being created as on 30th April. If the special condition is given like 1st May and whatever, so that is a a special kind of condition. But if nothing is mentioned, so 30th April before the date of maturity is the date when we can, transfer 10% of the total value of nominal value of debentures into the DRR account. Okay, and DRR should be created at the rate of 15%. Next, in order to create the DRR, so the entry should be surplus in statement of profit and loss account debit, surplus in statement of profit and loss account debit to debenture redemption reserve account. While transferring this, the entry should be debenture redemption reserve account debit to general reserve account. And as I mentioned, DRI should be created on 30th April before the date of maturity. Okay. So now let's talk about the DRI. So DRI is also, we are talking about the DRI separately also. So debenture redemption investment. So DRI should be created at least 15% of the nominal value of the debentures face value. So when DRI is invested or created, so DRI account debit to bank account, whenever we make some investment on account of DRI, that is debenture redemption investment, so the entry should be debenture redemption investment account debit to bank account. And at the time of realizing the payment, so the entry should be bank account debit to debenture redemption investment. Yes, this debenture redemption investment gets, collect some interest also. So for that, we are definitely we talk about that also. So in the next slide, we are talking about the interest received as an income. See, the company is making some investment on account of debenture redemption investment. So whenever we do some investment, so we are getting some interest on it, right? So I have given you two entries for the same. When interest is earned, but TDS is not chargeable. Now what is TDS? As I mentioned, TDS means in the previous class also, TDS is stand for tax deducted at source. Now what is TDS? Tax deducted at source. So first interest is when the TDS is not deducted. So the entry should be bank account debit to interest earned account. So interest earned is basically an income for us. So bank account debit to interest earned account. Second one is when interest is collected with TDS. Again TDS stands for that this is one tax deducted at source. So the entry should be bank account debit, TDS collected account debit to interest earned account. Now you might have a question in your mind, why TDS collected account is being debited? Because a portion of your income is being given to the government on account of your tax liability. So that is the reason you have earned the interest and a percentage, say 10% of this income is being given to the government on account of your tax liability. So that is the reason tax collected is basically a expense for you, and that is the reason why it is being debited. Now, what are the order of entry? This is very important. Most of us become confused while placing the entries. Where we have to place, like issue a debenture, then how can we place this? So I have made a shortcut tricks for the same. The trick is it is Ram Gopal, right? So it is Ram Gopal. So where I stand for issue a debenture, whenever you issue the debenture, so at the first you have to pass the entry for the debenture issuing, right? T stand for transfer to DRR. I mean 10% of this. Sometime the DRR is not created, as I mentioned that they are exempted, All India Financial Institution, Housing Board, and some listed companies are exempted for creating the DRR. So apart from that, if unlisted companies are there, so you have to transfer 10% of the amount to the DRR. So this would be your second entry. Third entry is investment made. So the investment is made at the rate of 15% to the debenture redemption investment account. So this should be your third entry. Now the selling of investment, whatever investment you have made, that investment is being sold. And next, redemption of debentures. So here you have to pass two entries. First you have to pass the entry for due, right? And second you have to pass the entry for the payment. So when I am talking about the due, so it can be again of two types, when the redemption are becoming due at par and when redemption are becoming due at a premium. So when I am talking about redemption are becoming due at par, so the entry we have already discussed, the entry was X% debentures account debit to debenture holders account. And when I am talking that debentures is being due at premium, so the entry should be X% debentures account debit, premium on redemption of debentures account debit to debenture holder account. And when I am talking about the payment, so yes, the payment should be debenture holders account debit to bank account. and at the end of the time, so whatever DRR is being created, so DRR is being, you know, transferred to the general reserve at the end of the, you know, while passing all the entries. So this would be your last entry to transfer the DRR into the general reserve. All right. So this is the order. It is Ram Gopal. Just take the first letter of the thing. So I stand for issue of debentures. T stand for transfer to DRR. I again stand for investment made. Next S stand for sale of investment. R stand for redemption of debenture, where I say due and payment wali entry, and G stand for transfer to general reserve. I hope you guys understand this. So this is the short trick where you can easily doesn't make any kind of mistake while passing the journal entries. Okay. So next and the last method is drawing of lots method. So what does it mean? When the payment are made in installment. When the payment are made in installment, what was the previous method? Lump sum method, when the payment was made at one go. And as far as this method is concerned, when the payment are, you know, payable in the installment. I'll just try to take an example on this. I can take an example that, let's take an example. ABC Limited has issued 10,000 8% debentures of rupees, 8% debentures of rupees 100 each, repayable in 4 equal installment. Repayable in 4 equal annual installments. See, we have issued debentures, 10,000 number of debentures, and it carries the interest at the rate of 8%, right? And one debenture costing rupees 100. So it simply means that 10,000 debenture is being multiplied with 100. So it means the total value would be 10 lakh. All right. So it is 10 lakh. Now, as per the question, it is given that it is being repayable in 4 equal annual installment. So 10 lakh is simply divided into 4 parts. So in the first year, we are going to repay 2,500 debentures. See, the quantity is 10,000. So we are going to repay 2,500 debentures and the price per unit is 100. So it means we are going to redeem, you know, this is 100. So we are going to redeem 2.5 lakh worth debentures in the first year. In the second year, we do the same, that is again 2,500 debentures at the rate of 100 each is being redeemed. So 2.5 lakh worth debenture is being redeemed in second year. Same goes to the third year and fourth year also. So this is the way how you can make the payment. But the most important part is how to create the DRR on this and how to create the DRI. Now my question is is the DRR is going to be calculated on the installment basis like DRI? No. Basically, whenever you are talking about the creation of DRR, so DRR is being created on the total amount, that is 10 lakh rupees. 10,000 into 100, that would be 10 lakh. So 10% of this amount has to be transferred to the DRR right after the issuing of the debentures in the market. So 10% of 10 lakh will give you how much? 1 lakh. So 1 lakh is being transferred to the DRR. So this is the question, right? Answer for the question. And second one is as far as the investment made is concerned. So investment we are likely to create 15% of 2.5 lakh. So 15% of 2.5 lakh has to be created. So yes, 15% of 2 lakh 50,000 will give you 37,500. So for this, the entry should be debenture redemption investment account debit to bank account. Now we have the option. We have the option is, we are going to redeem this amount right after payment of each and every installment, and since it is a equal installment, so we can create once in the beginning of the first installment and we can redeem it in the beginning of the fourth installment. So we can do that, right? So this is the thing. Now DRR is being created for worth rupees 1 lakh. We have already created 1 lakh. Now for this 1 lakh, since 4 installment repayment installment are there. So each installment is carrying 25,000 worth of DRR. Right. So whenever we make the first installment, so at that point of time, the entry should be DRR account debit to general reserve account. Let me tell you all the entries. First entry should be bank account debit to debenture application and allotment account, and simply 10,000 is being multiplied with 100, so that would be 10 lakh rupees. Next entry should be debenture application and allotment account debit 10 lakh to 8% debentures account, and that is 10 lakh also. Now the third entry should be, since the date is not defined, so the third entry should be surplus in statement of profit and loss account debit to DRR, and we can easily calculate 10% of 10 lakh. 10% of 10 lakh, that would be 1 lakh. Next entry should be investment made. So we can pass debenture redemption investment account debit to bank account and 15% of the installment payment. So that would be 37,500. Next entry should be withdrawing the amount, selling the investment amount. So the entry should be bank account debit to debenture redemption investment account. And the last one entry is, second last entry should be X% debentures to debenture holder. That is 2.5 lakh, 2.5 lakh. Again, debenture holder account debit to bank account. So this is one set. I consider this as an one entry. And last entry should be debenture redemption reserve account debit to general reserve account. Because we have created DRR worth rupees 1 lakh, and this 1 lakh is being divided into 4 equal installment. Because if I am talking about the first installment of 2.5 lakh, so the contribution was made for 25,000 out of 1 lakh. So debenture redemption reserve account debit to general reserve. Why this is being transferred? Because the first installment has already been paid, so there is no use of this debentures, keeping this debenture further. Similarly goes for the second installment, similarly goes for the third installment, and similarly goes for the fourth installment as well. You can only simply, you can change one thing, that I mentioned that debenture redemption investment is being created, and you can sell the investment also. So what else you can do is, you can create the debenture redemption investment in the first installment, and you can sell the investment at the beginning of the fourth installment. Why? Because installment are equal. The installment are equal. So that is the logic why we can create like this. I hope you guys understand. This is very interesting chapter. Based on, you just have to focus on considering the concept of DRR. Concept of DRI. So section 71 subsection 4 of the Companies Act, that should be in your fingertips. Section 18 subsection 7 of the Companies Act, again 2014, not 1956, 2014, the latest one, that should be in your fingertips. So you can do all the entries. And this is a very interesting chapter if you know the concept. If you know the correct order, so it is very easy to understand, easy to locate the journal entries for the same. So I hope you understand. So thank you so much. Take care. God bless. All the best.